Just note on the OPEC front reports that the OPEC ministers have begun their meeting.
We're inside a little more than 5 minutes now to the top of the 8 o'clock hour here in New York. Overall, U.S. equity futures continue to point to a higher open. The S&P Mini is up 1/3%. The Nasdaq 100 seeing relative outperformance once again, relative strength up close to 1%. European bourses are generally positive. The Spanish IBEX is a little bit lower on the day, while the DAX is up 0.4%. The CAC Kron is up 1/3%. The FTSE 100 is up about 0.5%. This follows a swath of generally stronger than expected PMI manufacturing readings. We saw beats for the Eurozone, France, Spain, and the UK. In general, risk on sentiment finding some better footing. Bond yields are lower as well, both in Europe and here in the US. The 10-year down, the 10-year 1.714%. The German 10-year lower by about 2.5 basis points at negative 31 basis points.
Hey, good morning. Comment allez-vous? How are you? Looks like I forgot to play the rock and roll music this morning. Sorry about that. Anyways, hey, it's a Thursday. Let's get on with it. Welcome to Forex.Today, the YouTube community of more than 17,800 foreign exchange traders. Thank you for being part of this community. Thank you for being a subscriber. Thank you for the likes. Thank you for the comments. And thank you for the positive energy that you contribute to this community every single day. Thanks for being here. Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Therefore, please always stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. So, hi, my name is Wayne. I will be your guide on this journey we call Forex. Please ask questions, get involved, treat each other with dignity and respect. And I will do my best to fulfill all your wildest Forex desires. Would you please, while we're at it right at the beginning, let's just do that. Please tell YouTube that this is quality content that would help just promote the community and what we do. I think we make the world a better place every single day. I'd like to thank Traders Way for being part of our community as well. We're traders. Traders need brokers. Brokers then execute your trades through their liquidity partners. Requires a lot to get licensed and registered and pay for these liquidity partners, pay for licensing, licenses for things like the platforms and all that kind of stuff. It's very difficult and expensive to be a broker. So anyway, so they need you. And we need them, so we call that a symbiotic relationship. They're trying to entice you into their business by doing things like providing education, providing small spreads, competitive fees, providing big swaps, world-class customer service, narrow spreads, all these kinds of things, fast execution speed. So would you please give them an opportunity to earn your loyalty and respect like they've earned mine? That's tradersway.com. And I guess I guess we should just get on with it. It's a Thursday before non-farm payrolls. It's also a new quarter, so welcome to the second quarter, which is good. So I've been reviewing my portfolio, like many people are, to see how the quarter ended, to see what's in store for the new quarter. How are you guys doing? Okay. You got your mind on your money and your money on your mind? Yeah. Cool. Stock market's up. S&P 500 is at an all-time high again yesterday, or pretty gosh darn close to it. It's pretty, I find it Dude, Hong Kong keeps calling me. I don't know who keeps doing that this time of day. I guess they're trying to reach me. And why don't they just leave a message? Anyways, yeah, stock market's at an all-time high. That's good for macroeconomic indicators, obviously, and leading indicators. That's good for consumer confidence and the household wealth effect because people have retirement accounts. Okay? So, very, very interesting. It seems to be okay. Things seem to be pretty good as long as for example, you know, and the media sometimes doesn't understand. Maybe it's because they're journalist majors or something, but we got, what you might consider negative news regarding existing home sales yesterday. And I'm like, what are you talking about? Like, that's not a sign of negative economic activity. It's not like, oh my God, nobody has money, so they're not buying houses. Think about it. Typically, when you look at supply and demand of a market, if demand is down, prices are down. And what we're most interested in is demand, because the media is like, oh my God, nobody's got any money. Everyone's dying of COVID. Therefore, they can't buy a house. I'm like, wait, that doesn't make any sense. Housing prices in the United States are up 10%, even in the South, for crying out loud. Everywhere in the United States, housing prices are up 10% or more. And existing home sales are way down. What does this mean? Well, how can you make prices up and demand down? There's a shortage of supply. That's why the number of houses under contract is low, because there's no houses available and people are looking to buy. So they're paying more. They're outbidding each other. I'm like, why doesn't these journalism majors understand this? Didn't they take one economics course? Not even intro? Not even economics 101? They didn't even take like home ec? I mean, come on, right? So I'm like, gee whiz, there's demand. People are looking for houses and there's none available. So anyways, it's just kind of funny. So, right? So anyways, it seems like we got stimulus, more stimulus, and now we're talking about more stimulus. How many people have been attending my macroeconomics courses, free to those in my live trading groups? One of the things we captured was the solo growth model, looking at productivity, then separating out consumption and the savings rate, and the savings rate is equal to investment, right? And so therefore, one of the things we were looking to move the steady state was what? How do you move the steady state if you're near steady state? If you're a mature economy like the United States of America, and investment and depreciation are stuck in equilibrium, how do you shift your steady state? I'll get my drawing tool out. Maybe I'll give you a hint. We are looking at various components of productivity, C plus I plus, right, plus G, and plus XN. How do you move your steady state? Type in a question mark if you just don't even have a guess. You have no idea, right? Maybe I asked the question poorly. Maybe you forgot. Ah, dang it! I just spilled my macchiato. Dang it! All right, no one's even got a question mark. You increase I. In this case, the government spending is I, so I is equal to G. But you increase I because then your level of investment is greater than depreciation, right? So like where's my drawing tool? So let's redo it this way. So you have a diminishing return, okay, of I, and then you have a steady depreciation level, and now you're in this steady state, okay? But now if you, so let's do this as depreciation, and then you do a new one and you say, well, you increase investment to a new level, which Joe Biden is doing, and what do you have? A new steady state. So we'll call the dark one I2, because you have to label your charts right. I know it's hard to see, but this is the new steady state. We've shifted from here, okay, which means what? Y will increase accordingly, okay? So anyways, so that's what, so Larry Summers came out. He used to run Harvard University. Then I think he was Secretary of the Treasury, something like that. Anyways, he's been around. And anyways, he hated the stimulus package that Biden passed. But now when you're looking at increasing I and you look at the solo growth model and you're shifting the steady state of the entire economy on the long run, he's like, you know what? It's actually pretty good. If he's like, I like the infrastructure part. Infrastructure. Okay. He likes that part. And that's the part I like because that's real I. You know, investing into other things like, you know, unproven technologies or I don't know. I don't want to get into that. But building roads and bridges makes the entire economy more efficient, and that helps for productivity. It doesn't help to have bad seaports and bad roads and bad bridges. It's and they've all depreciated to our steady state. So anyways. Cool, right? Hey, Barry. Happy 21st, man. I remember where I was when I was 21 on my 21st birthday. I was wearing plaid and I don't think they were cargo shorts, so that's before cargo shorts. Yep. Grunge days, I think. It was one of those, I think it was around that period of my 21st birthday where I went to see Nirvana. Saw them live in San Francisco at the Cow Palace. And I bought a shirt, and they misspelled San Francisco on the tour shirt, and it was the smiley face with the bullet hole through the forehead, like super unbelievably collectible. I threw it away. And now I'm like, oh. You know who opened for them? L7 and four non-blondes? Three non-blondes? Four non-blondes. I say, hey, yeah, yeah. Hey, yeah, yeah. I said, hey. What's going on? You remember them? Four non-blondes, isn't it? Oops, I just killed the chat. Come on, chat. Where'd you go? Okay. So anyways, we got some weakness here. On and off. This is good, but we want down. Here it is, April 1st. What we talked about 100 years ago is on April 1st, we want to see yen weakness, dollar weakness, and Swissy weakness. And I want to witness a rotation where dollar gets weaker than the yen. So I don't think we have that yet, but it may be developing. So you look at this and look for the rotation. And you know what this is? MM3, which means if it falls from here, it will fall a long time, which means they may both be weak, but right this second, dollar is weaker than yen, and that's the rotation we've been looking for, you know, that we talked about, let's say, 27 weeks ago. We said, by this day, by April 1st, we want to see dollar weak, we want to see yen weak, and we want to see Swissy weak. How about that? Knuckles. Amazing, right? Cool. Hey, by the way, should I be concerned you guys didn't get the question about how to move the steady state? And I hope I made the point that it's the stimulus pack or the infrastructure package that Biden's issuing. Oh man, I just ruined spilled my coffee and it's left a ring now. Hang on. Should I be concerned? That actually bothers me a little bit. I hope my presentations didn't suck, but I guess if the professor doesn't get the grades he wants from the students, then maybe it's the professor's fault. Yeah, well, a lot to absorb. See, so here's the issue. Here's what I'm trying to resolve. Okay, Johnny? Is that Biden announces a stimulus package, yet another, in this case, an infrastructure budget or proposal. And I look at it and go, oh, well, that's going to shift our steady state. And then Larry Summers comes out and says, yeah, he's all for it, but he's not for the previous stimulus package, which I was also against. I'm like, dude, we already know most people aren't spending it because they don't need it. If they needed it, they'd spend it the second they got the money. So I'm like, this doesn't make sense to me. Why would you do this? Why wouldn't you find the people that actually need it somehow and pay them? It's a transfer payment. Give it to them. Are they unemployed? Then give them money. If they're on welfare, then give them money. But other than that, don't give them money. Like, people don't need it. They just waste it on GameStop. Or they save it, which doesn't do any economic activity. But what it does is increases our debt, which on the long run is bad. So I'm like, I don't get it. I don't understand it. Nobody wants this money except the people that are already in a certain situation. Then help those people. So anyway, so I didn't get it. It didn't make any sense to me. And it's certainly not going to cure COVID, right? If the COVID stuff needs, 20, 30, 40 billion, which is nothing compared to the 2 trillion or 3 trillion. Yeah, okay, throw a few billion that way and let's fix it. Let's keep going. But what's this other money for? So anyway, so I didn't get it. Larry Summers hated it. Now this one comes out and I'm like, oh, it shifts the steady state. Okay. And Larry Summers is like, yeah, well, I like the infrastructure part. So that's where I am. And then I have Larry Summers backing me up, who actually I don't actually like. But anyways, there's at least 2 economists I know, me and Larry Summers, that are thinking in the same way. Like the first one I don't get, it's probably bad economics. And the second one I do get as long as it's on infrastructure. Okay. So now here's my problem. I ask, which would be a simple question, and nobody got it. And most people didn't even try to answer. So I'm like, either I asked the question poorly, or I taught it poorly, or I just haven't made those connections. So I apologize. What it means is you're not there yet. Where did my... So I got a crisis going on here. Where's my... my coffee ceramic thing. I'm ruining my mahogany desk. There's now a circle on my mahogany desk where my cup was. Wake up in the morning and I go outside, take a deep breath and I get real high. Oh my God, where did it go? Well, I'm going to have to use $100 bills. Maybe somebody broke into my house and stole my FX Bootcamp ceramic tile. All right, so I'm going to use money to protect my desk. I think what? $7,000 will do? Yeah. There you go. All right. So, yeah, it's not become instinct at this point, but that is the whole point, though, right, Johnny? I want you to be reading the newspaper on the weekend or listening to something on TV as you're trading, and you go, Connect. Okay. When Jay Powell says, as he's answering a question at a press conference, and he says, we're going to overshoot. You're like, that's it. Boom. Drop $1 billion on this investment that I'm going to hold for 5 years. And you're on it. And most other people are like, they don't catch it. And the media doesn't really catch it either, right? Yeah, Pure. I kind of do both, actually. But I want you to get at that level, right, Johnny? That's what I want for you. So you can be the Axelrod, where he gets his phone buzzes and he's just been notified there's been a massive earthquake in Chile, and he knows how to make $1 billion right now, but he's got to move. That's what I want for you. Oh, we're good. Something about overshoot. Boom, we got to move. Sell the dollar as fast as you can. Pick up the phone, call every prime broker. Sell it all. Sell the dollar. Just dump everything. Okay. Anyways. Okay. All right. So let's. This might be that rotation coming together. So let's start, let's do commodities, then we'll do exotics. So as you know, today's the OPEC meeting. So will this create an opportunity for you? Yeah, it could. So start by, choosing your lines, right? Find out, what do we know? Something going on here, something going on there. Okay. Okay, this is a weekly swing. You'll notice, based on what's happened this week, or is it daily? That's a daily. All right. So nothing's happened today is what what tomorrow's pivots tell us. Okay. So I don't know if you want to get into a new trade before non-farm payrolls or not, but at the very least, trap this and say anything below here will be a resumption of that move, and anything above this will be maybe a buildup. Right? By buildup, I mean, breakout, pullback, and maybe next week we're long oil again. Okay? Right now, technically, we went lower than 60. Okay, let's do what we were talking about. Oops. Let's go technical here. Below 60, which is a psych level. Retest 60, which is a roll reversal. Okay? And then that's what should happen if this trend will continue. Now, on the longer run, I'd like oil not to go down. I'd like it to go up, but I also understand there's some seasonality here, but we're also probably at fair market value. I don't think we're at global economic activity in the moment to justify $100 oil. We're not there yet. So maybe 50, 60 is where it should be anyways. Okay? David says, kind of get analysis paralysis. The way you deal with that, Dave, is you make the number one decision. Okay? And that has to do with, like to me, the macroeconomic activity. If you answer this one question, it puts you into as many trades as you could possibly handle. Okay? Okay? If you can answer this one thing, it'll give you as many trades as you can possibly handle. So you make a decision, and of course, I recommend that you do research. But if you can't do that, then guess. Flip a coin. I don't care, but you make a decision. So there's either expansion, and I mean for the next year or two. That's as far. Let's say for the next year or two. Or there's contraction. Okay? The first one is bullish. The second one is bearish. That's all you do. Okay? You make that one decision. Now, like I said, I prefer that you do research and actually find the information to make the decision, but you'll still benefit if you just flip a coin, because now you're going to set yourself up either, let's say, focusing on the dollar. If you believe there's expansion, you would sell the dollar globally. If you believe there's global contraction, then you would buy the dollar. That's it. So now, in the last week or two when the dollar's been strong, which we actually anticipated, right, you would do very well. And I know there are traders in my swing trading group buying US dollar and doing very well. They're buying Japanese yen, right, or have been, and waiting for the resumption of weakness. But in the period they were making money while it was strong. Okay? I would like you, if you don't know how to make the decision, then just pick one or the other. You need to be on a team, a bullish team or a bearish team. So David's like, analysis paralysis. Well, you look at WTI, and if you're, let's say the first one, expansion, you're at support, but the market is bearish. Actually, I shouldn't even do the support part. You are fundamentally a bull, and the market is not bullish, so you do nothing. What analysis paralysis? If you're using analysis to try to figure out, like if you're analyzing charts to figure out whether you should be a bull or a bear, then you're going to have analysis paralysis. If you're already a bull on oil, you're like, okay, well, the market conditions are not bullish yet, so I'll do nothing. Now, there's a lot of hope at this 59 and 60 level that maybe bullishness resumes. Maybe you'll be a bull tomorrow, maybe you'll be a bull on Monday, but you look at this, you're like, no, not yet. And you're done. No analysis paralysis. Okay? So, what kind of research could you possibly do on macroeconomics? And I was just, where is it? Here's something that I was just reviewing. The Tenkan survey from the Bank of Japan. Okay? The large manufacturing survey came in at plus 5, a large improvement from negative 10 the previous December. Up for the third straight quarter. Okay? Then you look at the subcomponents, right? Production of machinery, automobiles, metals and steel. Large improvement for production. Looks consistent with the trend in industrial production. Okay? So, this is telling us, and you can really break it down, okay? Iron ore and steel, pulp and paper, textiles, construction, okay? That you're going to see that in things like the earthquakes, right? They've had earthquakes recently, so you're going to see an uptick in rebuilding their economy and all that kind of stuff. So, anyway, so I was doing this morning, okay? And I'm like, cool, man. We went from negative 10 to plus 5, negative 13 to 1, negative 9 to 7. Okay? So what does that tell me? Well, it supports my thesis for expansion. It supports my expansion because things are happening in a good way. That's the kind of research that I do. Constantly. Never ending. It's not like a project like, oh, well, it's April 1st. I guess I'll go to the Bank of Japan website. That's what I do. Okay? David says, I recently saw fundamental information that says British pound rises every April. That's not fundamental. That might be seasonality, but you got to be very careful where you get that kind of information. Okay? I'd rather you tell me. I mean, dude, how difficult is it? to open up a chart and go back a few years and bust it down by month by doing things like, let's pick on every June. Let's say you do stuff like this. In this period here, I'm just picking random stuff. Every June to whatever that is. Every June to whatever that is. Make it tight, okay? Where's the next June? June, make it tight. Oh, move it over, okay? And you can do this for anything and anytime. You can look for your patterns, okay? What you definitely need to do is not listen to anybody but yourself. And you have your own research. So I'm just randomly picking every June. So we're making an assumption, is there a pattern in every June that we should be ready for this June? Okay, so what are we on? WTI. So June, this was up, up and down, up and then down, down, and then up. I'll make this should be a little wider, right? Generally up. Okay. Okay. Now, okay, so that's seasonality, let's say. David, if you look at 50 years of oil inventories, which I have done, you will find that June 1st is the peak on average over 50 years in the supply. From January 1st to June 1st, oil inventories go up. And from June 1st to December 31st, inventories tend to go down. So you could have a say like, oh, if we're drawing down oil, what happens to oil? If we're drawing down supply of oil, what happens to oil? If we're drawing down supply of oil, what happens to oil? If we're drawing down, see, every year is slightly different. Remember, these other years, we had challenges, okay? And eventually you saw we had a war going on. But it seems like 1 year, 2 years, 3 years, 4 is sort of, 5 years, okay? Over the last 5 years, 4 out of the last 5 years, oil inventories generally went up. So maybe this comes down until that period, and then generally, maybe it'll go back up again. That analysis, not the seasonality, but explaining why, like you studied 50 years of oil inventory data and found the day on average oil inventories peak, and then correlate that with moves in the oil market. That's fundamental analysis. Okay? Reading something, an article, or listening to a blogger or something, and they're like, yeah, oil goes up or what did you say? Pound goes up in April. That's not enough. And by the way, whoever told you that is only partially right. Okay? Okay? Almost certainly, it's the dollar falling, not the pound rising. So you could also argue. Now they'll say, well, look, pound prices went up. That is true in terms of dollar. Is it true in terms of gold? Is it true in terms of euro? It might be true in terms of yen, but how about in terms of Aussie? And what you might find is pound dollar, Great British pound dollar, may go up most Aprils, but then you find out most Aprils, Great British pound versus Aussie dollar is flat, or there is no correlation. Sometimes it's up, sometimes it's down, okay? But then you find out Aussie dollar versus USD tends to go up in April. Okay? And this is the problem listening to other people, especially on YouTube and other places, because YouTube doesn't check your qualifications to give your opinion and lectures to amateur investors. And what you'll find out is you were told pound goes up in April, and then they show you pound dollar going up, and then but what they're actually wrong, it's the US dollar falling. And it has to do with seasonality of global business activity that is using the reserve currency. And then you find out you're like what you're learning here might be 9 levels above what that kid does on YouTube. And he's like, I buy the pound every year, go, buy. Right? And then you find out they think they know, but they probably don't. And they couldn't do the math either. So, great. Okay. So what I'm recommending is you go back in time, find the pattern, and then do the research to try to explain why the pattern occurs. Like, knowing a pattern occurs doesn't do anything for you, because you won't be able to get into a trade consistently with patience and discipline year after year after year after year. So you might as well figure it out and spend the time and do the research. And that kind of activity will make you a great trader. So I can tell you from seasonality, going back only 20 years, Aussie dollar is going to go up on average. And someone else is telling you pound will go up. Yeah, that might be true. But if they're both going up, it's more likely dollar falling, especially if it's everything is going up versus the dollar in terms of dollar, because the dollar is weakening. Therefore, if everything generally is going up in terms of dollar, then it's not the pound going up, it's the dollar getting weak. Okay? So you got to be better than whoever talked to you. You can say, yeah. Again, what they're doing is they're saying eating ice cream makes the temperature outside go up. And they can show you all the charts. And they could do the math, sort of, and say, look, the more ice cream you eat, the hotter it gets. Look, every July, ice cream sales double. And it's 10 times more than when you get in December. So you can say, in December, it's cold. Nobody's eating ice cream. But as soon as they start increasing their consumption of ice cream, and especially May, June, and July, when they really eat a lot of ice cream, look at the data. It gets hot. Look, it's so hot, these periods. And then, and this will just blow your mind, it happens on the other side of the planet. When you're in South Africa, the opposite is true. When you're in Australia, the opposite is true. They eat ice cream at a different time of the year, and there it gets hot. It's crazy, right? And and then you're like, you have to raise your hand. You're like, causation and correlation? Maybe they're eating ice cream because it's hot. And they're like, no. I've been doing this trade for 27 years. Let me tell you how I know. So go out and buy a whole bunch of ice cream. Let's corner the market. Prices are low for ice cream. It's December. Everybody buy ice cream and eat as much as you possibly can, and let's make it hot outside. And of course, right? Then you find this guy making bad trades because he thinks he can control the market. I mean, come on. Right? So just be careful. Okay? Just be careful. See, I want you to succeed. That's it. So cool. I want you to do well. So you got to know. Remember, Veritas is what we took. The moniker at Harvard is Veritas, and that's the truth through knowledge. Okay, so be careful. News is not fundamentals, and seasonality is not fundamentals. Cool. All right, so there's your my oh my WTI. Today is the OPEC meeting. Remember, we're really more interested in OPEC plus. Okay. We also know that when you look at the historical average and the distribution of the historical average, oil inventories should be building up right now. And we also know we have more than we normally have if you look at the distribution, the 5-year distribution. So we're building up and we already have more than enough. So OPEC is going to want to cut. And by the time we get to June, that would probably be a new, right? So we got April, May, June. So by the end of this quarter, oil should go up because at that point we will draw down. But remember, most people get very simple and they say oil inventories data is up, oil inventory data is down. They're only looking at now and now. What I'm saying is, and by the way, I did this a couple of days ago, I guess. I got the monthly report. But what you want to do is, where is this right relative to the 5-year distribution? Okay. And drawing down might be one thing, but we still might be, right? Let's say we have a 5% drawdown over the course of a month. Okay. Whatever month, I'm just picking a random number, but we're 100% over the 5-year norm, which actually, let's make it more likely. We're 95% above the 5-year norm, which you would know is equal to 2 standard deviations from the mean. Okay, 2 standard deviations. That's a 2. Sorry. I know I'm sloppy today, huh? We got too much going on. 2 standard deviations from the mean is equal to 95%. Okay? So what you do is you get, like, let's say there's your year, and then you're gonna see things like there's the high end, here's the low end, just basically Bollinger Bands. And someone might say, oh my God, oil inventories has fallen 5%, but you're still way here. You still might be at, so let's say we went from 100%, so we were here, and now we're here, and we're still at unbelievably high levels of inventory. But some guru somewhere or some journalism major working at a big financial institution might say, oh my God, month over month, we're down 5%, and they lose the sight of the fact that we're still 2 standard deviations from the mean, and the mean would be falling anyways. The mean would have, let's say, on average, fall 5%. So it did fall 5%, but we're still 2 standard deviations from the mean. There was no improvement, and you might find the actual oil market, right, doesn't do anything. And everyone else is freaking out. Oil's coming down. Oil's going to come down. Did you see inventories? You're like, seasonality, 5-year distributions, so on and so forth. The relative change is 0. And there's still extremely too much oil. Okay? You see? So you have to put everything into context. And I think we did this in the swing trading group maybe a month ago. We looked at the 5-year distribution. We saw that we were probably 1 standard deviation from the mean, which is, 78%? I'm guessing. 78% above the average for the year. So it was still a lot of oil. Okay. Cool, right? Cato says, yeah, it's difficult to grind and study and all that stuff when you really don't know. Yeah, well, all I can say is for many people, like this macroeconomics course, I hope is an eye-opener. So I'm really trying to give you the quick and dirty and easy version of a Harvard education in economics. Right? Like, I think I take you places where in the beginning it starts out like you think, and all of a sudden you're like, wait, this is going different areas. And I'm pulling up research directly from the Fed. I'm pulling up research directly from the IMF. And we're doing like really complicated models by the fourth or fifth hour, or probably sixth or seventh hour. But anyways, all of a sudden we're getting to pretty high level levels of economics that you would just never have known and thought about. And then I'm going to bring it back in where we're actually downloading GDP reports from the government website and looking at the subcomponents and all that kind of stuff. Another eye-opener, I believe, is the fundamentals course where you learn about monetary policy. And people just don't realize that within 5 hours, you're managing the balance sheet of a commercial bank. And then I teach you about central banking, because you can't run a central bank if you can't run a commercial bank, right? So like all of a sudden you're like, none of this will probably make you a better trader, but it'll open your eyes, right? Cato's like, it's difficult to grind and study when you don't know what you don't know. And all of a sudden now you know what you don't know, and now you have the choice. Do you study monetary policy for the next year, reading books, reading articles, taking courses, all that kind of stuff, or not? Do you dive into macroeconomics once I get you warmed up? Because we're doing macroeconomics without the calculus. There's no calculus. There's no math. You're like, dude, this is super easy. But as you can see, I asked a simple question and people are like, it's super easy without the calculus, but these are pretty detailed economic models. But once you understand, then when something like what just occurred yesterday, with Biden announcing an infrastructure plan, now you can think like Larry Summers. Now you can think like Wayne McDonald. Now you can think for yourself and say, oh my God, we're shifting the steady state. Cool. So the Democrats will be around 8 years. We'll make these massive investments that Republicans wouldn't make. And then we'll fire all the Democrats. And then we'll put in Republicans. And entrepreneurialism will be spurred for the 8 years after that. And so what you're doing is you're shifting I for a while. And then once the I is shifting, you moved your steady state, then you increase your A. And you have to know what all these are in the model. But once you increase A, then you shift the steady state again. Because you're not moving the investment, you're moving the productivity. And so once you get all this stuff, now you can make better decisions than probably most people, professional or not, in this market. So there's my little goal, to at least enlighten you through the truth, veritas, so that you can decide how much of an expert you want to become. Do you want to be an amateur expert, or do you want to be a professional expert managing people's money and helping them make decisions based on fact and not whatever else there is besides fact? Okay. Uche says, why am I using a bearish template on gold? Because I'm trying to measure when it stops being bearish. I don't want to look at it from a bullish point of view, even though I'm a bull, because I know it's not bullish. And the last thing I want to do is say, well, I want to buy it because it's at an M2. I don't want to buy it at an M2 in a downtrend. I want to buy it at an M2 in an uptrend. You see that, Uche? So it's more like I'm talking myself out of the trade. And then when it turns bullish, I will talk myself into the trade. Okay? Okay. Cool. So I'm waiting. Is there anything bullish about this? Well, the mean is less than 0. there's an acceleration to the downside. And right now we're still trending off of bearish sell zones and daily 21. The daily 21 represents that gold is bearish and aggressively bearish. I would be a fool, a nutcase, a nincompoop, a gullible to buy this. Do you want to be a gullible? No. So this is ridiculously bearish. Mama didn't raise no fool. So I'm going to wait until it becomes not bearish. And that, something like this would be great. Great. I love it. It's great. Okay. But not now. You can have it. It's yours if you want it. But you can sell it, right? Cato's like, hey, Cato, you got blocked, but it's funny. He says, my main problem when studying is I don't know where I'm studying is guru shit or quality content. Yeah. I'd be, let's put it this way. Cato, I think you're right. No one taught me. So I didn't have to get knee deep in guru shit. Okay? When I started, Amazon.com was an online bookstore. Didn't carry very much. It didn't sell anything else but books. So I had to go to Barnes & Noble. So there was nothing on Amazon. So I went to Barnes & Noble. There was nothing at Barnes & Noble. So I had to go to Stanford University's bookstore, and I bought textbooks for economics and finance students to try to teach myself about the foreign exchange. So you'd buy a $300 textbook, and there'd be one chapter on foreign exchange. Okay? That's where I started. My first trading platform didn't have charts. I had to spend something like $200 or $300 a month, maybe $500 a month on charts. So I think, what was my first one? Metastock or Metastock charts or something like that. No, and then IntelliCharts, which was an FXCM thing. But anyway, so I'd have to pay, I don't know, $200, $300, $400, $500 a month just for my charts. And then they came with a bunch of indicators like this. And I'm like, well, what the hell is all this crap? Okay. Relative vigor index. What's a demarker? The CCI, commodity, right? That's Woody, right? I forget his name. Woody created that. Anyway, so I'm like, so what's a bull power? What's a bear power? What's average 2 range? So I had to go through and just really study it by placing it on the chart and observing how price worked in all these. And over the course of 5 or 6 years, I whittled it down to stuff that's crap and didn't add any value to me. I couldn't figure it out. To stuff that worked pretty well some of the time, but not so well other times. And so then I'm like, I tweaked and tweaked and tweaked and tweaked. And then to the point where I realized I was just back testing and getting the results I wanted, right? So anyway, so I killed all that and I got it down to the things I need. And even since then, I've dropped stochastics and MACD. I probably shouldn't have. But the reason I did it is I understood them so well, I can do the calculations in my mind. I can look at the chart and know what the MACD is. I can look at the chart and know what the stochastic is. So I got rid of them, but it's helpful information if you don't know how to do it, right? But anyways, so I got here the hard way. Before Forex, I was a venture capitalist, right? So I wasn't a trader. Okay. I didn't buy and flip stocks. I didn't do options. I didn't do commodities. I didn't try out FX and get good at it. I started with FX. Right? Owning stock as a venture capitalist sounds stupid. You unload your penny stocks on top of some idiot that'll pay you $65 for it. You're like, you want to buy my shit stock for $65? I paid 10 cents a share. All right, great. Boom, it's yours. IPO. All right? So that was sort of the mentality. So I never was interested. I was interested in the markets, but not like trading stock or doing some weird options trick to make some quick bucks, right? So it was never into there. So when I took the Series 3, I had to learn about options trading and stuff like that. and that futures and options. And so I started dabbling into that from my exposure to the Series 3. So I started looking at oil, 10-year T-note, S&P 500, that kind of stuff, trading DAX and Nikkei. And I started doing all of that. And then I got crushed on taxes and regulatory burdens and other things where it took a year to do my taxes. It was so unbelievably expensive. So I started getting away from all those markets, trading them as individual things, like actually trading the Nikkei, right? Actually trading the S&P 500 and the FTSE, all these different things, actually trading oil futures, not oil on our MT4, right? And so I started to then consolidate that into what we do here now, where everything is considered Forex. And if I can't trade the S&P 500 directly, I can do it indirectly through correlations in the foreign exchange market, right? Long story short, everything I teach you is stuff that I've taught myself. I didn't have an economics degree 6 years ago. I knew a lot from being in the market for 15 years. And I knew a lot I taught myself central banking. I taught myself markets. I taught myself global flow of money. I taught myself this stuff, but none of it was formal. So again, never informal, self-taught, no guru shit, as you said, right, Crypto? Or Cato, right, Cato? So then I filled the gap of no formal trading by getting, a bachelor's degree and a master's degree from Harvard. So now I can say, look, I'm formally trained. I have 20 years of experience, but I also have a formal education. So I never had to fall into the trap of, guru shit. Okay. No, I know. I can tell you're not, Cato. So all I'm saying is I agree with you, right? Yeah. So I don't know. Maybe hang here for a while, man. Okay. Cool. All right. So we'll move out of that. So it's not bullish, so I'm not interested. Pretty simple, right? We'll go here. Our trade plan was buy it at the 618, which just happened to be 50,000, and that it should go up to 65. We're caught on the top here. That's called technical analysis. So it might just do a little dipsy-do, or it could do one of these and then break out. Both of those are acceptable. One of the things we did talk about is how price will start to behave in many of the pairs, especially yen pairs, will start to do this more and more often, then break out and then do this. Okay, and then break out and do this. And those are step ups. Right? Speaking about, today's Thursday, right? So yeah, so if you're in my swing trading group, we are meeting today at 2 p.m., just as a reminder. Okay? Just as a reminder. Should be interesting. We've been preparing for this day for three months. We've been preparing this day for 3 months. Very cool, huh? One of the things we talked about, and it's just sitting here on my desk, one of the things we've been talking about is once you have enough money, how you diversify out and build wealth. So I don't know if we want to talk about it now or talk about it someday. How do you diversify out of Forex? Because Forex gives more than enough. Forex is a giver. I love Forex. But at some point, you're going to either have so much money, you could just stop and walk away and live forever. That's not actually how it happens. Because to get to that FU kind of money, you can't spend your money. And most people here cannot go 20 years without spending their Forex account, especially if you want to quit your job. Right, Nuno? Right? Like, you get in this conundrum. You have to have a job, to earn income so you don't spend your Forex money. Now, your job might be working for somebody else as a Forex trader, as either as an analyst or you work at a bank, or ideally, you have a track record of success that you reach out and you start managing other people's money so you live off the 20% you earn from that trading. Meanwhile, your account is still growing at 50 to 100% a year. And you do that for 20 years. And now you just one day, you just walk out. You're like, right? You're like Dr. Dre. Just one more platinum plaque and then fuck rap. You can have it back. And you just walk away and become a producer. And then what? Then you start Beats and you sell Beats for $1 billion. And you're like, even better. Right? But that's a very difficult thing to do. So you always have to have side hustles is one way of looking at it. So you, as you grow your trading account, you have more than enough at some point because you're more worried about losing money than making money. So then, and you have more than enough to do well in Forex because you don't take 40% drawdowns. So why do you need so much cash? So then what you do is you diversify and you take some of the cash out of the account and you do things like buy real estate. Why? It appreciates, it depreciates, right? And what? You collect rent. There's income. They're like bonds. They're like bonds. The price can go up and down, but you'll always have income. Your renters will pay you, right? So we can talk about that. I just happen to have this. Right? I don't know. It's just sitting on my desk. Okay. That apartment building pays me rent. This one in Miami pays me rent. Nice. This one in California pays me rent. Nice. This one in Atlanta pays me renta. Nice, right? Anyways, that's what you got. You got to diversify out. So I'm thinking we should have a different group or a different conversation for these things. But it's going to be the next step, right? Right now you're trying to master Forex and make some money. And then you need to put together a track record of success over 5 years. And then ideally you start trading other people's money. Right? You're going to need to start trading other people's money because you're going to need the income. And then what'll happen is you'll end up working for somebody like me, and I won't make you rich, but you'll work for me for 5 or 10 years trading other people's money. And then you're like, dude, I got 5 years success before I started working for you, Wayne, and then 10 years of working for you. So now I got 15-year track record of success. And then you go out and start your own hedge fund. Now you're getting there. Meanwhile, all these years, 15, 20 years, you're growing your own cash and you're not drawing it down. So who's going to make you rich? You will make yourself rich. It'll only take you 20 years. It'll only take you 20 years of working your butt off every single day. Going on vacation with your laptop. Yeah, that's all it takes. That's easy. If you can't do it, you'll never get rich. Why? You don't have the work ethic. It's too hard. You can't do it. You can't. It's too hard for you. It's too complicated for you because you're not willing to do it. Now, most people here are like, those are fighting words. I'm strong enough. I'll do it. I'll do whatever it takes. Good. That's great because it's going to require that. Okay? So one of the things that we did, I think on Thursday, it was Thursday in the swing trading group where we talked about one investment strategy that I have going, right? It requires, I have to defer some pleasure every month, right? Money that comes from my business doesn't go to my pocket. I could take that money and spend it and be pleasurable, okay? But instead it goes into an investment strategy. So I don't get any pleasure. Every month, money doesn't come to me, it goes there. Why? I'm actually dealing with taxes. It's a tax strategy. Nice. So I'm actually not depriving me. I'm just not giving it to Biden. Cool. But it gets invested in my name or on my behalf because I'm the UBO. So that gets invested. So, right? In 20 years, it'll be worth something. Okay? Somebody did the calculation. They're like, dude, that's like 1.5 million. I'm like, really? Well, I have to give something up now. Okay? But that's the business of being a trader. Gurus won't tell you that because they don't know these things. So I have a tax strategy that when I'm too old to work, 65, let's say, is the official, 65 and a half is when I could even think about it. So let's say the day I turn 65 and a half, there'll be an account which I can start drawing down with at least 1.5 million, which was just to avoid paying taxes. I would have paid the taxes anyways. So I deferred for 20 years. And guess what? That's when I start paying taxes. Cool. So how long am I going to live? Well, I don't know. I might have to live on that 1.5 million for 20 years. Right? 65 to 75, 75 to 85. That's about right for, a beautiful white male. Right? So that's what other gurus don't talk about. Camera on. Why did that happen? Okay. I just wanted a calculator. Okay, so you do something like, here's the math. 20 years times 12 months, right? You can probably do this math. Okay? Divided by 1, 5. Boom! 1 extra 0. I did it the wrong way. 1,500,000 divided by 240 months. Okay? I make $6,000 a month for 20 years. That one account, and all I did was avoid taxes. That's more money than the average American retires on. Can you imagine that? Of course, I'll still have that money invested, so it should still be growing at 8%. Okay? So again, that's a separation from gurus that are trying to teach you how to get rich quick trading a stochastic oscillator. They don't even think like a business. They don't think like an empire. But you're going to need to know this stuff too once you figure out Forex. You see that, right, Cato? Okay. Well, David, wealthy people don't spend money. Okay? Wealthy people don't spend money. That's the whole point. I quoted Kanye once, and I was told by YouTube commenters that I'm a racist, and how dare I, and stuff. So I'm not going to quote Kanye. But wealthy people don't spend the money. Okay? I'll use that retirement account as an example. So let's say when I turn 65 and a half, let's say I actually have some money. Because remember, that's one tax-deferred strategy into my account. So I have multiple accounts, obviously, retirement accounts, savings accounts, all this kind of stuff, right? So this one account is going to pay me $6,000 a month. When I don't work, I don't have to work, nothing. So let's say I have enough money to live anyways. I own my own house. I got a whole bunch of nest eggs, right? Millions here, millions there. And then this one account with 1.5 million every month pays me $6,000. Great. So I go out and I get a Lamborghini and I lease it. I'm like, I worked hard as a Forex trader my whole adult career, and I've always wanted a Lamborghini. So I go out and I lease a yellow Lamborghini. And they said, sir, first of all, you have excellent credit. You have an amazing, right, equity to debt ratio. We're happy to lease this to you at our most competitive leasing rate. In fact, we'll lease it to you at 1% interest, right? Great, fine. It's $3,000 a month. This is the nicest one we have. Great. Make sure it's in yellow. And I drive away in my yellow Lamborghini. Keep in mind, I don't actually pay anything for it. That money sat in an account growing at 8% for 20 years. It's free money. It's free. I would have just paid taxes. You see that? But then the account doubled and doubled and doubled. Great. So at the end of it, I got all this free cash flow that I have nothing to do with because I got other investments paying me too. So I'm like, this is like free money, like $6,000 a month. What am I going to do with this? I don't need more money. Great. Well, I've always wanted a yellow Lamborghini. Boom. Free. Snap. So a wealthy person never spends money if they have a big boat, if they have fancy cars, if they live in big houses. Do you understand that their house pays them money? Do you understand that? Trump flies around in a giant private jet, not a little one, a giant one, and he writes it off in his taxes. This is why he doesn't make any money. People are laughing at Trump because they're like, hey, he's broke. No. He owns billions of dollars in assets, but he got no money. But his business allows him to fly on a jet that costs probably $100,000 to fly from Florida to New York because it's such a big plane. Cool. But it doesn't cost him money. He doesn't have any money. Money is what poor people have. But he owns businesses that have income, and businesses pay the expenses. They have money coming in, right? Cost of financing, cost of ownership, other expenses like private jets. All that gets paid for, all washed out, income minus expenses, and at the end there might be a little bit left over for reinvestment. And you're like, yeah, he's got no money. Rich people have money. Wealthy people have no money. Money is worthless, right? So think about it that way, right? David's like, how do you invest your money? You seem to spend it $20 here, $20 there. You don't spend money. You should stay absolutely dead broke. I explained this the other day where you're like, I would like a TV. I'd like a new TV. I saw one at Sam's Club, a beautiful 65-inch OLED. Oh my God, what a beautiful TV. I'm like, oh, that looks so good on my wall. But I don't have any money. I don't have any money. It was so cheap too. It was like $3,500. That used to be a $30,000 TV. I'm like, oh my God. But I don't have the money. Why? That money I put aside this month to go into that account so that when I'm 65 and a half, could be more, but roughly it could be 1.5 million, it could be 2 million, it could be 3 million. I don't know. I can't think that far. 20, right? But if as long as it's growing and compounding at 8% a year, on average, it's going to be 1.5. It could grow at 9% a year and it'll be 2.0. Sweet. So I'm like, I'd like to buy that TV, but because I don't spend money, I invest money. As soon as I get money, I get rid of it. I put it over there so that when I'm 65 and a half, the TV is free. The house is free. The vacation's free. The nice car is free. The nice dinner's free. Nice clothes, free. Okay? Free. Everything's free. Wealthy people don't spend money. Everything's free. Because they have all this cash flow because they own assets that pay them cash. So you could think about it like the apartment building. Where's that one in Florida? It's cool because you can drive right across the bridge and you're in South Beach. So like this one, you're like, those renters paid for your Lamborghini. Every month, they pay your Lamborghini lease for you. Cool. You're like, hey, it's so nice owning that apartment building. I love it. Okay? That's the difference. You see that? So you never want to be rich. Rich people work. Rich people get paid for their time. Right? A doctor is rich. A lawyer is rich. People look up to them. Do you know being a doctor sucks? Do you know being a lawyer sucks? Do you know how much sacrifice and dedication and, first of all, investment up front, and then you still don't make any real money, and then you're like, well, to make real money, I'm going to have my own practice. So you open up your own business, your own office, you sign 10-year leases, you hire office staff, and you buy computers, and you buy all this kind of stuff, and then you hire some other doctors, and all of a sudden you work 90 hours a week just so you make sure you can pay your staff, pay your landlord, pay your other doctors, and at the end, you've made minimum wage. These things suck. Yeah, you make $500,000 a year, but you're broke. And if you need more money, you have to work more. And if you want to go on vacation, they stop paying you because you only get paid for your time. A wealthy person wakes up in the morning, looks at their watch and says, I made $40,000 today. I think I'll go take a shower. No, wait. I think I'll swim in my beautiful pool. You see? Now you're wealthy. And you're like, where does this money keep coming from? What do I do? Oh, it's all my assets that I own. Versus a doctor that's in the emergency room at 3:30 in the morning handling car accidents, and children are injured, and people are shot, and homeless people are puking all over the place. And you're like, I have a $200,000 debt so I can do this on a holiday? See the difference? Right on, Brad. Hey, Brad, I want you to follow up with me, though. B-Rad. First of all, what a great license plate that would be, huh? First of all, you're welcome, and I'm super happy for you. But follow up with me. Send me an email so I can, I want to see what you're doing and how we can take advantage of it and do things right and improve and all that kind of stuff. But I know you sent me about 10 emails, right? So send me another one. Keep me informed. Okay. But congratulations. Yeah. Johnny's like, and they're some of the worst business people and even worse investors because they think they're smart. Lawyers are terrible business people too. So anyways, you would never want to be a doctor, never want to be a lawyer. For some reason, society looks up to them, maybe because they make a lot of money. Do you understand that? They look up to them because they make $300,000, $400,000 a year. What you don't realize is they do make that money, but they work all day, every day. While you're barbecuing, they're working. Okay? So at the end of the day, it's not actually worth it. What you want is freedom and independence, which are two different things, even though they sound similar. So anyways, we'll get you there. Forex is going to take you there, by the way. And then from there, what you need to do is then diversify. Diversify. At some point, when you are too old to work, you'll still trade Forex. You see that? You'll still trade it. It's so wonderful, but you don't have to rely on it. There's a difference. David says poor communities are almost addicted to instant gratification. Well, but the problem is they need it because they have instant problems. Okay? So I didn't grow up rich, so I know what it's like. Right? I lived in a house with no running water. Well, that's not true. That's an exaggeration. I lived in a house where we didn't have a sink in our kitchen. That's true. I'd have to go to the bathroom where the bathtub was, fill a bucket full of water, hot water, put some soap in it, take it to the kitchen and dump it into the, this, I don't know, this, it was like a sink with no hole in the bottom. No, it drained, but we didn't have water. There was a sink, just no running water for the sink. I don't remember. I was young. So anyway, so one of my jobs is I'd have to fill the sink with hot soapy water, do the dishes. I don't know how we got the water out. Anyway, so I grew up poor. I know a lot of people have it worse, but when I say I grew up poor, I mean it's reasonable. I had a loving mother, and I was safe. There were no gangs in my neighborhood at that point. There is now. But every once in a while, when I think life is beautiful and life is easy, I can just drive not that far towards Atlanta, get off the freeway, and see the stress and the anger and the worst part of poverty is the waste of time. Right? It's so hard to get out of that because you lack so many resources that everything is a problem. And therefore, the people around you, almost everybody is trying to scam you. But then your problems are so hard to deal with and they're always there. So I'll give you an example. I saw this and I actually brought it up to my children. Someone had their car break down. I think it was like a flat tire. But the car was obviously beat up, obviously not wealthy people. We drive by, but someone was helping them. Cool. And I'm like, well, what you do is you just pick up your cell phone, call AAA. Someone will change the tire for you or tow it away. It's nothing. It's nothing. You're done, right? Like, oh, you have to wait 22 minutes and the tow truck shows up and then off you go. It's fixed. The problem's done. You go on with your day. So we drive past again. 4 hours later, they're still dealing with the problem. And I mentioned it. I'm like, look, it sucks. Now they have wasted their whole afternoon. They had to have a friend come and help them. They're blocking someone's driveway. Right? And they can't afford to simply call a tow truck and fix it. Like, oh, there's a problem? Oh, well, dude, right? This is what money does. Oh, you got a problem? Oh, fixed, right? It's convenient. But when you don't have any money and the problem's there, now you're like, oh my God, we've been here all afternoon. What about my kids? When do they get home from school? How am I going to get to work tomorrow? This is such a big problem. Meanwhile, you're not being productive. You're not at your work. You're tired when you're at work. You're not getting promoted. You're not getting increase in your income. Your kids don't have a parent at home. They're not getting a healthy, well-balanced diet. They're not doing their homework. And all of a sudden, you're trapped. You're trapped in the poverty. It's so inefficient. And then I find it, I get frustrated and then I get angry. Not at the people, but at the situation, because I know what it's like. And it's such an unbelievably draining burden. It's like holding you down. And you're trying to fight, but it's never ending. Or you can be in your backyard, sitting next to your beautiful flowers, looking at your beautiful lake, and the warm sun on your face. The only sound you hear is a neighbor 3 blocks away is having their gardeners blow their driveway, and you're like, oh man, sound pollution. But you don't hear like sirens and shootings and screaming people. It's quiet in the rich neighborhoods, right? And all of a sudden you're like, this is so peaceful because I know what it's like and I appreciate, right? I appreciate the difference. Remember, you can never be happy without the appreciation part. Yeah, it's an emotional distress. And it's hard because everybody's holding you down. Very few people are pulling and pushing you to keep going. Very few people are cheering for you. I hope you're a success, Johnny. Right? You very rarely get that. So you go through and there's just this negative energy that's buzzing and I can feel it. It's horrible. Traffic and noise and problems and stress and anger, and it's horrible. So I know, and that's why I fight. That's why I fight. Yeah, Michael, I agree. And Johnny says the same thing. Yeah, I am doing non-farm payrolls tomorrow because that's when they're releasing it. But it's going to be a short one. I'm just pulling the plug and moving on quickly. So, right? So I know. Yeah, Peter's making a comment about commuting and all that. Yeah, I used to commute. So if you add it up, like I added it up. Maybe I should do it again. I think, what was it? Count. So my neighbors are rich, but they're not wealthy. They live in a nice house. They got nice kids. They own boats and they own RVs. They go on vacations. They just put in a new pool. They're fine, but they're only rich. So they have jobs. Okay, 90 minutes each, right? They commute 90 minutes each. Both people work 180, right? But that's one way. Multiply that by 2. So they spend 360 minutes a day commuting. Mommy and daddy are away from home 6 hours a day just to go to work. Does their employer pay them the 6 hours? No. Do they pay for the gas? No. The tires? No. The lease? No. It costs you thousands and thousands and thousands and thousands and thousands and thousands and thousands of dollars a year just for the privilege to go work for that idiot boss. Okay? Times 20 days a month, times 12 months. Okay? So let's say those numbers, let's just rough it down. 1,500 hours. That there can't be a mommy, they can't be a daddy, they can't be a son, they can't be a daughter to their parents, they can't be lovers to each other. They're sitting in their car doing nothing and paying for the privilege. So they waste 1,500 hours. Let's say lease and expenses and stuff, what, $2,000? $1,000 a month each is probably not enough. I don't know about the cars. Okay, so let's say they spend 1,500 hours for free and $25,000 a year. And I don't. And I appreciate the difference. They spend $25,000 a year and they give up all their relationships and all the value they create, 1,500 hours a year. Oh, and they have to pay for a nanny to pick up the kids from the school bus and to take the dog for a walk. What does she cost? $2,000 a month? $3,000 a month? I don't know what a nanny costs. I spend time with my children. I cook them breakfast before they go to school. When they come home at 3 p.m, I'm like, what's up, guys? Welcome home. Sometimes I've actually done this. I stand on the front stoop and they're coming down the street and up the driveway, and I'm standing on the stoop and I'm clapping. I'm like, bravo, bravo. I'm proud of you. And they're like, Dad. But I get to do that. I know it's silly, but maybe they'll remember me when I'm long gone. Okay? So anyways, what you have in front of you is not easy. It's complicated. It will take time. And there's lots of distraction, lots of noise. It's the temptation of Christ. You have to walk the righteous path. Cato is trying to go from Cato has a simple question today. How do you get past guru shit and find something that you can really grow a skill and develop true knowledge that will carry you the rest of your life? So Cato has a choice today. Okay? This journey should last decades and decades and decades, depending on how old you are right now. I've known some of you guys for almost 20 years. Some of you guys have known for 20 months. Some of you guys have known for 20 days. Some of you guys have just known the last 20 hours. But we're on a journey, but you choose to take the next step or you don't. Sounds like a giant sales pitch. There's only 3 minutes left before you can buy the deal. The question is, do you want to fight hard enough? Do you want to take the next step? It's a small leap of faith, not a jump off the cliff. If you want to secure income independence for the rest of your life, then you're going to have to work really hard the rest of your life. There's no quick way. There's no quick method. The clock doesn't stop ticking in 3 minutes, or this offer is gone forever. There isn't a new cool trading strategy. You get up, you work your ass off all day, and you're constantly worried and stressed about what you're doing and the performance and whether you achieve your goals or not. But you'll love it. It'll be the best thing that you've ever done. And 25 minutes or 25 years from now, you'll be grateful for the life that you've led and the legacy that you're going to leave behind. Cool. Let's do a couple more and then we're out of here. Okay, South African Rand. Okay, here's the trade I did on Monday. Oh, didn't mean to make that fat. And here's where we are now. We're nearing my target. Complicated stuff, right? We call that a swing trade. Cool, right? Now the question is, are you going to treat it like a weekly swing? Or are you going to trade it like a monthly position? The monthly position has a different target than the weekly swing. If you're doing the weekly swing, M3 predicts M1, and you will take profit right here at 14.6037. Not a problem. If you're doing the monthly target, you're going all the way to 14. Okay? There will be a challenge here. But the thing is, have you studied your seasonality? Have you made a conviction for your investment? There's multiple ways you can handle it. And if you're aware of the decision-making process, then they're all correct. You might say, Wayne, this has been a nice trip. Okay? This is a top, lower low, lower high roll reversal with a monthly central kicker, but we're here at support. This is definitely support. We're 2 shakes of a lamb's tail away from the M1 anyways, so what's the difference? Might as well just bail on it. And you could do that. That would be a successful weekly swing. Okay? This trade up here is not a weekly swing. It was made way off the chart to the left, and it is also suggesting this. So the question is, how do you fold this trade in? Okay. Well, are you treating this move as a lower high? And if so, this move as this target, or is it going to break out, pull back, and re-enter? So you could exit this now, put the money in your pocket, and re-enter here. What are you going to do? What you going to do? Shit, I got a pocket full of pips and my homeboys do too. Right? Johnny's like, I thought the plan was June. Yeah, that's what down here is. Most people are not thinking that way though, right, Johnny? So Johnny, though, one thing that you could do is, sell at resistance, exit at support, sell at resistance all the way to June, July, and then taper. Tamper your enthusiasm, right? But the thing is, you got to have these trade plans done in advance. You can't just show up and react. Okay? This is just a simple example of something that we set up well in advance, right? You can see how patient the trade was. Kick it off here. It's not like I sold it just off of here. No, I waited for the lower low, lower high, lower low, lower high, sell. Done. Easy. Okay? What else is it? Okay? It's an R1 projecting out to an S1. You see the bottom? This is S1 right here. Look. Gorgeous. Reset. Is this going to happen? I don't know. But isn't that what you're trying to do? That's what you're trying to decide. Do I know? I don't know, but I made a decision. Okay? Cool. Isn't that neat? So the real question, right, for all of us is if you're making this trade, are we going to get down to 14? 13? Lower? Why do you think that? What can you show? What evidence can you show? You can see I'm just trading this as a range. Okay, right now the top is here. The bottom is here. Now what? Okay, so, right, you can see my trade is, right, one trade is here, a second trade is here, and we're currently there. One trade, two trades, and this is where we are. So, at some point, do you believe it's going to do this? And you're like, well, how would I know that? Okay. Macro, fundies, seasonality. Seasonality. Those would be the places I would start if I were me. Or we're just back to where we were. Okay, this trade right here. Okay, interest pays me 10% internal rate of return per month. Oh, it's so nice. It's so nice. Okay. Yeah, Johnny, and I said that was your decision, right? And you need to learn from the decision. More interesting than what the decision is, you need to learn of the decision. And more importantly, what you would recommend next year. And then I said, don't make it a decision for everything. Make it a decision for how do you handle an early test of support in early March versus early April. They may be different. You earn it every day, Richard. It's called swap. Yeah, right on. So, hey, man, everybody here, super happy that you're on my team, that we meet every day. Thank you for being part of the Forex.Today YouTube community. Please click the like button. Please subscribe if you're new. Please leave a comment. If I said anything reasonably coherent today that kind of piqued your interest, please leave a comment. Document what that was. First of all, you're documenting in your brain that it was important to you, so you might actually remember it. 2, it's searchable now, so now you can search for it inside your YouTube area, and you can pull it up again. But 3, you're also documenting it to YouTube, saying, hey, this was quality. I even wrote notes. Maybe it's a thank you. Maybe it's a detailed essay. But leave a comment, huh? If you're in my live trading group, I will see you in a few hours at FX Bootcamp. If you want a link to my training videos, fxbootcamp.com. The link is in the below. If you want to join my live groups, the only way you can get invited to join the live group is if you've gone through the video training courses. So you got to start there. There's a link to my book. There's a link to my chart templates. There's a link to Trader's Way to open up a demo account. Remember, these webinars and live streams on YouTube, they don't cost you money, but they come with an obligation. There is a cost, and that is you visit tradersway.com and open up a demo account. Fill out the form. It shows that this is quality content to them. So again, to my swing traders, to my traders that are in my professional track learning how to be portfolio managers, I will see you at 2 p.m. Eastern Time in the War Room. Peace on earth. May the pips be with you. Oh, let's go full screen. Peace on earth. May the pips be with you. May your profits be above average, and I'll see you tomorrow. Again, thanks for being on my team. You is good people. Cheers.